Hello, everybody. Welcome to another episode of the System2 Podcast. Today, we're talking to a data provider that we like to use across a number of our projects. I have the pleasure of speaking with Dale, who is the founder and CEO of MedMine. Dale, what is one stock that your data is really good for and why?
Well, first of all, thank you for having me. It's actually my first podcast, so a little bit of pop my cherry here.
Nice.
And so just to give you a little bit of background on the data we collect, I can get in a little bit into some of the stock picks. So our data is healthcare data. More specifically, we capture information around medical devices and hospital supplies sourced from over 4,000 healthcare providers across the U.S., mostly hospitals and hospital systems, but also surgical centers, physician groups, and things like that. Getting into the stocks, where we do extremely well are for those companies that really cater to the hospital segment of the provider market, right? So things that are inpatient, surgical, that's where we do really well. Other areas, that are more outpatient focused, ophthalmology and things like that, our capture rates are on the lower side. But one of the names that over the last couple of years has been sort of an interesting story is Boston Scientific. Tends to drive stocks in this space really are product cycles, right? New products come into market, shifts in technology, adoption of that new technology, outcomes for patients, etc. So there's a very large market called atrial fibrillation. That's an irregular heartbeat. And technology to treat atrial fibrillation, which is typically done with cardiac ablation. That's where you go in and you actually kind of create scars on the interior of the heart to block certain electrical conduction. There are certain technologies that were used to do that. Some use radio frequency, some use cryoablation, using cold technology to kind of scar the tissue. And more recently, you have something what's called pulse field ablation or PFA. The outcomes are much better with pulse field ablation, and Boston Scientific was one of the forerunners in that space. So over the last couple of years, they came in with a new product called FireWave and really converted a lot of the old technology to this new technology. And the stock, in 2005 and 2004 performed extremely well. I think, more than double over that time period. So we actually wrote a LinkedIn post back in December of last year, kind of looking at what was going on, looking at all the competitors, Medtronic's another competitor, Johnson & Johnson, looking at the different technologies and conversion of, the older technologies, radio frequency and cryoablation to a new technology, PFA. And we saw back in December that, the adoption of PFA had gone to over 90% of the overall market, especially when you look at cryoablation, for example, that almost gone to zero. And Medtronic was a big player in cryoablation. So they were losing, Boston was gaining market share. And we asked the question, it's like, where is the next level of growth going to come from, right? So now you've done conversion and market share shift from the old technology to the new one. Now you need expansion in terms of indications for the new technology and where is that going to come from. And we didn't really see that happen when we looked at our data, right? And in 2026, this year, Boston stock has cratered. It's down nearly 60%, if I'm not mistaken. And so here is a great example where 2 years ago, as we saw the adoption of new technology, and we saw that in our data, there was an opportunity to go long the stock. And then, 2 years later, as that part of the adoption curve kind of flattened out, there's an opportunity to go short the stock. So I think Boston's a really interesting story. Now, I personally think it's overdone. I mean, the stock is trading about, mid-teens on forward earnings and typically trades about 30 times forward earnings. They've got an acquisition that's going to happen later this year with Penumbra. And they're a really great operator in terms of just managing a growth product portfolio, doing really smart acquisitions. So it'll be interesting to see sort of what happens, right? So even if you have mean reversion back to a historical trade and multiple, you could have a pretty good win on the stock. That being said, this within the background of a really poor tape for healthcare generally, like healthcare has really sucked for a really long time. And so, you kind of need some of that macro headwinds to kind of abate a little bit. But I think, it's one of these names that, and I've been looking at this name for 20 years, when I was formerly as an analyst, on the sell side and buy side, and even now as a data provider, it's a story that kind of keeps coming back. So it's one to watch.
I'm curious on the mentioned acquisitions. I would imagine that you can look at both companies to see their relative market share in different geographies so you
Mhm.
can get a sense of how additive or synergistic that acquisition is going to be? Like, can something like that be done with your data?
Absolutely. And, we, in addition to work with financial services, we do a lot of work with corporate. And usually we have a lot of data on private companies. So when they're doing due diligence, they tend to come to us and look at some of these private companies. Of course, we're not aware of any deal that's in the works, but, in retrospect, we've seen that happen where they've come in and like, okay, now I know why you want to do that project. Private equity is the same thing where, we've worked with private equity in the past and they'll come in to diligence companies. So, whether it be sourcing a deal, whether it be diligencing the deal or monitoring it post transaction, we're able to do all of that with the data that we have in this source.
It's interesting. Maybe take a step back and talk to us about how you started the company. What was the impetus behind it, and how did you end up?
So it's an interesting story. I'm in my mid 50s, right? So sort of had a long career. Healthcare has always been a stable in everything I do. Undergrad, I was pre-med. When I graduated, I came back to New York. I took a year off and started working at Sloan Kettering, not too far from here, doing cancer research. And I did that for about 4 years. Did some really interesting work. And that was during, the Clinton years where you had, the first attempt at healthcare reform and doctors were absolutely miserable. And, I was very friendly and very close to a number of doctors and they all discouraged me from pursuing a career in medicine, and which was kind of deflating for me because it's what I always wanted to do. And so I was like, okay, now I'm like sort of 25, 26. Med school is a long haul. What do I do? So I actually decided to go back to grad school at NYU, and I got my degree in molecular biology. And then I started doing some courses over at Stern at night, and I was like, oh, I discovered equity research for healthcare. I was like, this was interesting because I could still do all the stuff I love in terms of science and medicine, but with a different use case or application in finance. So I ended up going to, after I graduated, I went to Payne Weber and then I became UBS and I worked as an analyst there. And then I went to the buy side for a while, went back to UBS. And, there have been disruptions in my career over the last 20 years. I mean, there was the financial crisis in 2008. I got blown out then, came back. And then before starting MedMine, I was at ITG. And you probably know the guys over there, right? So it was Majestic Research, got acquired, FTG, and now they're M Science. I was part of that team doing healthcare. They decided that, they didn't want to do healthcare. So I spun out and started MedMine.
Spend a little bit more time on ITG. Something that you guys were doing back then was pretty revolutionary in terms of using data for investing.
Yeah, so certainly Tony Berkman, right, who founded one of the founders of Majestic, commonly called the Godfather of data, right? So Tony's a great guy, and so I worked for Tony, and a lot of the work that they did was different than what we do with MedMine, and healthcare data in particular was a little bit of a challenge for them because a lot of the work they did was kind of web scraping. They had, I don't believe we had credit card data, but they had some other data sets like casino data. So they bought some data. These guys in Macau would go into the casinos and like count people and do that kind of stuff. So it was really interesting. What was challenging about the data set that I work with now and actually did some work with it at ITG was the fact that it requires a lot of curation. It requires a lot of data cleaning, data structure. And so it wasn't, linear in terms of going from raw data to analysis. There's a lot of work that needs to be done. And it tend to have a lot of volatility in it. So cracking the code, we spent a couple of years after I started MedMine cracking the code to figure out how to do that, was a challenge, but we've been able to do it successfully. So, at ITG, the acquisition integration of Majestic into ITG had with it some challenges, right? Because ITG traditionally did not have a research business. They were agency broker, and so that integration and how that kind of worked did have some challenges. So there was some restructuring. Guys like Tony left, I left, and then subsequently they ended up spinning that business out, and it became M Science, which is backed by Jeffries and Leucadia. So it was a very interesting opportunity and time, but it had some challenges that came along with it.
And when you went off on your own, were you scared?
I had always had a bit of an entrepreneurial bias or tendency, but always, I'm not sure if scared is the right word, but it was never the right time, right? I didn't have enough money in the bank. I had other obligations, what have you, right? And, it is a big thing to do. And to start to do that in sort of, my early 40s, I was kind of like, okay, but, it's kind of like, what the hell, I was sort of tired of kind of not having control over my destiny a little bit. Like I said, I lived through the financial crisis. I was at the UBS. I was actually out of work for about 2 years, right? So, that was a difficult time. And, when I first came to Wall Street, it was like, so that had, and the internet bubble. So, I've kind of lived through these major disruptions and dislocations over the course of my career. And so it was scary, but at the beginning, it was fun. It was a lot of fun. It was like even simple, stupid things that come up with a name,
Yeah.
and I designed the logo and, the color palette for all our stuff and getting that first piece of business and getting that first check and then, having confirmation over the years that clients were happy with the work that we did and came back. We've got clients now that have been with us 5, 6, 7 years. And I think that's very confirmatory to the work that we do. And so that's good. I mean, I will tell you more recently, it's, become more challenging. The space is a lot more crowded.
What about that? Like, we're hearing about all sorts of different data providers coming out with healthcare data
Mhm.
nowadays. How do you differentiate yourself from them? How do you think about the competition?
Sure. So, we started back in 2013, right? So we were 13 years old, and we are probably one of the first ones out there providing this data. Subsequently, we probably got, half a dozen or so direct competitors out there, a couple of whom, kind of approach us to acquire us, have gone through a diligence process, and subsequently launch a product. I won't say more about that, but, read between the lines. I think where we differentiate ourselves is the fact that, especially for our quant clients, we've probably got the longest longitudinal data set in the marketplace. Furthermore, we have probably the largest point in time data set in the marketplace. So for anyone doing any sort of algorithmic work that needs to do that back test and needs that point in time data, I think, we do quite well there. Furthermore, I think, we have the longest track record in terms of performance of the companies we cover on the fundamental side. So we can go back and show you, in some cases, 10 years of performance and consistent, low error rates tracking relative to reported sales, for the work that we've done. I think the other thing that I'm particularly proud of is, just our responsiveness to clients, right? So, we do try to go that extra mile. We really try to see the relationship as a partnership, not just as a sale. And so, we will do a lot of extra work that's outside of the contract. Right. So, and especially, I get a lot of junior analysts who, they get thrown in and they're like, okay, go figure this out, do this work. I need this answer. And they call us all the time and I'll sit on the phone with them for an hour, 2 hours, kind of walking through things. And how do I do this? How do I do that? And we'll actually kind of go and say, okay, you know what, I'll just do it for you and send it to them. And so I actually enjoy that, right? I enjoy that. And so I think those are some ways in which we kind of distinguish ourselves. Where we, kind of have shortcomings is we're a pretty small group, right? I mean, it's primarily financed by me. We didn't raise a lot of capital. And so when you come up with some of these competitors, I've got like, 100 people in deep pockets, you are fighting an army. There are lots of boots on the ground. So, that's where, and, we kind of like being small and nimble. So,
Do you feel like the data is complementary with some of the other data sets out there? And just in terms of even the sources where you're getting it from, are
Mhm.
you guys getting it from different hospital systems? So if I'm an investor and I want to have more coverage on a stock, like, does it make sense to buy multiple medical supplies?
Yeah, I mean, a lot of this data is very complementary. So I'll give you a good example here. So Abbott Labs, right, the large medtech company that we've been covering for quite a long time, they just acquired a company called Exact Sciences. So Exact Sciences makes an at-home test for colon cancer, right? They send you a test kit, you provide a sample, you mail it back. We don't see any data. Yeah, I don't want to get too off color to describe what exactly it is. But you send a sample back, and so our data doesn't capture that because it doesn't go through a healthcare provider. It doesn't go through a hospital. So there are other data sets. So, for example, some claims data there's a unique claims code for that test. So the guys that have claims data can speak to, that product and that company, that part of the business, whereas our data does not. Now, if you look at claims data and you're looking at a total knee arthroplasty, total knee replacement, they'll tell you how many of those are being done every month, but they won't tell you whose knee got implanted. Whereas our data will capture, is it a Stryker knee, is it a Zimmer knee, it's a Johnson Johnson Dupree knee. So these data sets can be complementary if used in the right way. And
I want to go back to the point that you made when you're talking about starting the company. And this can be relevant for young entrepreneurs out there. You mentioned that you wanted to wait until you had enough money to start the company. What does that mean? How do you think about, like, one is when you have enough money to
well, you never have enough money, right? I mean, and I probably take a different approach to most people in that, like, I primarily finance a business myself. If I were doing it all over again, I definitely would use other people's money and
Why is that?
less. Well, it's the risk profile, right? I mean, when you're starting a business, your life doesn't stop, right? Your rents or your mortgage or taking care of your kids and your family, none of those bills kind of go away automatically, right? And so if you're kind of reallocating your personal resources to starting the business, you don't all of a sudden have 2x the amount of cash you had because you're starting a business. So, and there are people out there who want to do this, right? They want to invest in new companies and they want to, that's part of their investment strategy, et cetera. So it's not as though they're doing you a favor, right? I mean, they're actually doing it because they want a return, as do you. So I think balancing the personal and the business is an important thing. And maybe I didn't do that as well as I think I would have in hindsight. And so, we did raise a little capital, but it was mostly like friends and family. And when I thought of, doing a proper, kind of seed round, not an angel round, I couldn't kind of run. We had already sort of been running the business. We're generating operating cash flow and kind of, financing the business through that. And I kind of had to choose, am I going to, because raising capital, as you probably know well, it's a full-time job. All right. I mean, it requires a lot of your time, a lot of your attention, and it takes away from you actually being able to sort of run the business. And so we were kind of looking to raise money. We're kind of having opportunistic conversations with people, but I was more focusing, I know that I can go win that next deal. I know there's a check coming with that. I know that's going to pay the payroll and things like that. So I kind of focus that way. But if I were to do it again, I would definitely look to have outside capital because it always costs more than you think it's going to cost. It takes more time than you think it's going to take. So you always data costs is expensive, right? Acquiring the data, and not just acquiring the data, but we're a cloud-based company, right? So the cost of compute, data storage, all that kind of stuff. Now, we use AI in some of the work we do, the cost of data, AI subscriptions and tokens and all that kind of stuff. It all adds up, right? And then, of course, you've got your staff, right? Healthcare. I mean, like benefits is, quite expensive. Like it blows me away how expensive healthcare is, right? And we try to have a robust healthcare package for our folks. So there's a lot of stuff like that. And then all the things that you don't know. I remember, sales tax. So when we started, we reached out to New York State Department of Finance and we're like, well, should we collect sales tax for this? And, they're like, well, here are the documents, here are the statutes, whatever. So we went through them, spoke to our accountant, our lawyers, and like, yeah, I don't think you guys qualify here. Of course, 2 years later, we got audited and they're like, oh, you should be collecting sales tax.
really?
So then we had to write a check, right? And so there are things like in it, it varies state by state, but in New York State, data is taxable. It's considered, I don't remember the minutia of it, but it's like a research product. And yeah, so you have to collect sales tax. So of course, despite our efforts to, reach out to them and ask that question, we didn't get the right information. And, these are just the things you kind of like, those are the growing pains.
Yeah. I mean, that is one of the interesting things about starting a company is you become an expert in all these different
Yeah.
topics, whether it's tax laws, accounting, sales.
All the legal stuff, compliance, due diligence. Yeah.
How on the data acquisition side, how does that work? Do you guys do a rev share with your providers? Do you have to flat out buy it? Like,
We flat out buy it.
okay. That's it. To your point, that also costs money.
Yeah. And it increases every year.
The first check that you got, what was that like? Was it, do you remember?
It was tiny. It was tiny. We actually we did a project for a consultant firm, and it was a small project, and it was, I remember distinctly, it was the most random project ever. So if you go to a hospital, you get an IV. Usually they put like this little cap on it, where there's a little, I forget what it's called now, but attached to the IV, there's an area where they can inject medicines and things like that. And so typically what they would do is before they inject something, they would wipe it off with a swab with alcohol in it. And it's something where it's a source of infection in hospitals. And so someone came up with this simple but ingenious thing of having like a little cap that has an alcohol swab inside, and you just kind of like screw it on, and you just take it off and you throw it away. So they wanted to figure out the size of that market, how much of the stuff, like the most random thing that you could possibly think about. So we went and we pulled down all the data, and and so what happened was, and this is sort of an interesting story when it comes to growing pains. When I started a company, my associate when I was at ITG was going to come along with me. So I left first. I started setting up the business, doing all that kind of stuff, and then he was kind of working part time with me, and then he was going to come on full time. So I went and I got this project, and he was a data guy, right? So I didn't know how to do SQL or any of that. So we were supposed to do the project, call it Monday. Friday, he tells me that he doesn't want to do this anymore. So I went that Friday or whatever day it was, the weekend before, and I found a boot camp to do SQL. So I spent the entire weekend learning SQL. I knew some little bits and pieces here in order to do the project, to deliver it the following week to the client. Got it done. Probably not our best work, but they paid us. And, so that was our first check. And it was literally like, I don't know, $5,000 or something like that. It was a small project, but you got your feet wet, and it's your first bit of business, so you tend to be quite proud of it.
Yeah, I can totally relate to that. I remember it was similar with us. Like the first check that we got when speaking gig coming into hedge fund to tell them about alternative data, and they paid us like $5,000 to come in and do that. And I was like, okay, this is it's cool. Like it's not as much as I was making before, but
Yep.
it's the first money that I felt like I actually earned. You
Yep.
went out there, got the hard way, and that's it's interesting how that changes. We're curious about other random projects. I mean, to your point, our data set can be used across a wide range of names, whether it's a big company like Boston Scientific or some random IV components.
Yep.
What other random projects have stood out to you?
There was one really interesting one that we did a few years ago, and this was post-COVID. And so we did this for a firm that they provide expert opinions in legal cases. And if you remember, during COVID, there were shortages of a number of things, gloves and what's called PPE, personal protective equipment, gloves, eyewear, all this kind of stuff. And so there were hospitals that very early on were hoarding a lot of this stuff. And I don't think they were doing that in an intentional way or to make some sort of economic profit, but they saw this pandemic happen and their suppliers had a lot of inventory. So they just bought as much as they could, right? And you saw these huge spikes, right? So we'd been tracking it, and I guess, I don't know the details of it, but a lawsuit was brought against this practice. And so they came to us to examine, the 4,000 or so facilities that provide us data across the U.S. and their buying patterns across, PPE and the prices that we're paying and things like that, to see they're in price gouging and where, and we saw, in the Midwest, for example, there was huge purchases, and whether or not, those products were resold in the aftermarket, it's unclear, but that was an interesting project that was very sort of like outside of the realm of what we typically do.
Super interesting. Yeah, no, I mean that is the cool thing about, and I'm assuming this was for a lawyer or an investment firm that was doing this real.
So their business was they provide expert opinions on things. You've probably seen in courtroom dramas, there's always someone that comes in and, is an expert on whatever, So that's what they do. But they weren't an attorney, but they worked for attorneys.
I'm curious if you take a step back and think about all your clients. You mentioned you're selling into the expert network folks, you're selling into hedge funds, you're selling into healthcare companies. What have you learned about those different types of clients? Like what surprised you? Who's generous? Who's cheap?
Yeah, I would say on average, our clients are easy to work with. They're great. I do think there are clients that can be difficult. One of the big misconceptions I think some clients have about alternative data or the work that a lot of us do is that there's this magical answer, right? That, the data tells the truth, always tells the truth, and, it's unimpeachable. And that's just not true, right? First of all, data by definition is a sample, right? No one has 100% of the market. And so it's incomplete, right? Quote unquote. Furthermore, to get from the data to some answer to a question, you're typically putting it through some model, right? You're building a model, and models all have weaknesses. None of them are 100% accurate 100% of the time. And so I think some clients get frustrated, like, well, I paid you this money for this thing and it wasn't right, or it wasn't 100% right. And you're like, well, you have to consider all these factors that come in. Have you thought about this? Have you thought about that? And, and I'll give you, some clients get that and some clients don't. And I'll give you an example. In the first quarter, Stryker, which is a company we follow, right? An orthopedic company, I think it was early March when the Iran conflict started, they got hacked. And, so they put out a press release and we're looking at the data. We're like, what does this really do? And so, there's a regular seasonality that shows a sequential decline in the first quarter, but then it's like, how much more would this impact? And then kind of happen like, I think the second week of March. So you're almost done with the quarter. Like, how much effect is it really going to have? And so we're looking at data. Of course, we're modeling it and we're doing all that kind of stuff. And I was speaking to a client and it's like, we know it's going to be down because seasonally it's usually down. Plus, you've got this other effect. So, we adjusted the model so that, it's a little bit more conservative based on what we're seeing with the data, right? It was, we're projecting. But I said to them, remember, our data is the book of business. Companies don't recognize revenue unless they ship, right? So know that there's a blind spot here and you have to look at. For those clients that actually go that next step and ask those questions and have a conversation with us about the data, it's much more informative to them. Those clients will say, well, this is your number, even if it was better than consensus or direction correct, you're off by 2% or whatever, and they get upset. So those challenges, right? I think there are some clients who are just a lot better at understanding how you work with this type of information and knowing that it doesn't stand on its own, that you do need context, you do need curation, and, put that all together. And there are those other clients who are like, well, I just want that number and that number has to be 100% correct. And I think that's unreasonable.
Yeah. That's a great point about revenue recognition and is a sell in, sell through.
Yeah.
Understanding how your company actually recognizes revenue and then tie that back to the data is huge. And another example I liked about working with your data or adjusting your data is the point that you made around different hospitals reports at different time periods. And so it could look like there's a decline in something, but it could just be the time that you're looking at it in the month might be, or some big hospital has actually reported. You need to adjust for that. I mean, I'm curious if you can say a little bit more about that, like understanding the panel and like where data's coming from and making those adjustments.
Yeah. And, there's some data providers out there that kind of have different, data than ours that speaks to procurement, right? So I know one provider, for example, is more of an exchange that they're getting their data from versus us that gets us from the hospitals. Unlike credit card data, this supply chain data for hospitals and med tech in general sits behind a wall, right? So we can't just pull it out. We have to have it sent to us, right? And the hospitals aren't contractually obligated to send it on the first of the month or whatever, right? So they send it, and we see effects of holidays and things like that on submission of data, right? Easter, Thanksgiving, Christmas, when people are away during the summer vacation months. So we know to look for that, and there are methodologies that we employ, be it data fill-in or trend in the data or what have you. Because we provide row-level data, you can do panelization. So you can create a fixed panel nationally, regionally, by different bed count. So you can slice the data in different ways to get a view. And oftentimes those views are confirmative of each other. So you can then come back and at least get some sort of consensus around what's going on. But, it is a challenge. I mean, you'd like to get the data the minute the transaction happens and be able to do that. But even that introduces noises, right? Excuse me, because the buying patterns for a hospital will be different than someone going to McDonald's or, going to Costco or what have you. Some hospitals will buy once a month, sometimes from a particular manufacturer, right? So take heart valves, for example. It really depends on pipeline of patients. So they're not going to sit on hundreds of thousands of dollars of inventory if they don't have the patients kind of coming through the system to get those procedures done. And it's not necessarily the case that every month I'm going to do 50 heart valve cases, right? Some months I'm going to do 50, some months I'm going to do 10, some months I may do 0. Right. And so there is that volatility. So sometimes when you get, too granular in terms of the time component of the data, it could introduce more noise and signal. And, I often caution people that going back to when I started before MedMine and I worked on the sell side, who worked at PainWeb and UBS, our franchise was really built around a data product, which was IMS data for prescription. And so we started out providing it monthly reports. And then people wanted it more frequently. And then we started doing weekly reports, like a slimmed down version. And then IMS started providing daily data. So we bought that and we started providing folks with daily feeds. As you got from monthly to weekly to daily, the signal decayed. And by the time you got to daily, it was just noise. And people were trading around it. And, some people were lucky and made some money, and other people were unlucky and lost a lot of money, to the point where after some period of time, they came back to us and said, we don't want the daily data anymore. We kind of went back to that monthly and weekly and monthly data. So, it is a trade-off. I think people want things very quickly. They want that, low latency. But it doesn't necessarily mean you're introducing noise into the marketplace. And some people take advantage of that because volatility is what traders like. But it doesn't necessarily mean that you've got accuracy and good signal. So the longer term investors kind of tend to suffer, whereas the traders, kind of do a little bit better. So it kind of depends on where you sit in the ecosystem.
Yeah, I really like those points around thinking about the nuances of these are people on the other side ordering these things and also submitting the data.
Yes.
There's a lot of change when it comes to whatever happened. Yeah, there's a holiday or there's the volume of patients, or my CEO yelled at me because I'm spending too much on this. I got to cut back from a little bit, but I need to reorder it later. So that's what we've also seen is if you can put yourself in the shoes of people that are generating the data and think about what it is about their workflows that could have generated that data set and try to make the necessary adjustments, you can end up with a much better product instead of just relying on it being out truth.
And one of the great things about the work that we do is because we have so much history, we can see the patterns at a facility level, right? So you can really dig down and say, well, I know every time we get a data load, we do a lot of metadata analysis. So we run through, we're calculating Z-scores and things like that. We know when a data set looks incomplete from a particular facility. We know when there's, it's outside the normal buying pattern. We'll investigate it. We'll go back to our data partner and say, hey, this doesn't look right to us. So we have a lot of processes in place to really identify it. And so we're able to extract that extra level of intelligence as opposed to just sort of processing data and passing it through. And so I think that's something where, we do add a lot of value.
Yeah. You mentioned at the beginning of the conversation that there are some macro headwinds in healthcare. Talk more about that. How do you see the future of healthcare, in particular on the device side that you guys focus on?
Yeah. So, excuse me. There've been a number of things. So last year it was tariffs, right? And a lot of the manufacturing for a lot of medical devices, be it the entire device or some component, are done internationally. And so tariffs were really disruptive last year. And because the way med device companies sell to hospitals, it's on a contract, right? And that could be a 3-year contract or 5-year contract. So they're locked in, right? So they can't pass that through. So most of the med tech companies had to eat the cost of the tariffs, right? So it affected their margins, less so the top line. But, it was a problem. And some of that's reversed itself. Actually, it ended up being a little bit better than medtech companies had predicted when it first started happening. The tariffs, of course, were all over the place, right? One day it was 30%, the next day it was 10%, and who knows. But it created a lot of volatility and uncertainty in the marketplace, and that got reflected in the trading multiples for these companies. So that definitely was a big headwind last year.
So on the point about margins, I thought was really interesting because if they're on a longer term contract, they're going to have those tariffs. You guys see that pricing in your data set, not just value?
Yeah, so we're seeing, the at the revenue level, we're seeing that pricing, right? And we can see, changes over time and how that works and price distribution across the country, right? So one of the things that we're developing a software product right now for the hospitals where they'll be able to identify savings because they're paying a higher price than the guy down the street because there's, no transparency with regards to pricing, right? So it's all negotiated. And if you negotiate a bad deal, that's your problem, right? But now if you have better information, you can negotiate better prices. But yeah, so that really hit margins. And most companies had some sort of estimate that they put out there. We don't see specifically what their costs are. That hits their cost of goods sold. But we do know it was a headwind for them for all of 2025. And now it's beginning to reverse a little bit in 2026. So the comps get a little bit better on the margin side going forward. So that was certainly an issue last year. Reimbursement has been a big issue. So in the second half of last year, all the wound care companies, they were just getting whipsawed around because, one day Medicare or CMS, I should say, who kind of runs Medicare, would say the reimbursement is going to be X and then change the next day, or they took away codes. It's been a mess in terms of, the public payers, and then the private payers kind of, piggyback on that. So reimbursement has been a real big challenge in the second half of last year and into this year. And so that's been affecting a lot of these companies.
On that point, you guys, if an investor, you go back to that point about combining different data sets, you guys can see how many heart valves have been sold at the hospital, but the reimbursement may have changed for that procedure. So by marrying the CMS data with your data, you can potentially get an interesting read on.
Yeah.
Yeah, that's
So, looking at claims data in conjunction with PO data, can give you a different picture. Hospitals do sort of publish their prices for procedures, right? That's a law that passed a few years ago, so they have to do it so you can pull all that down. So you can create a mosaic and, there are some data providers that kind of have multiple data sets and are beginning to do that. And again, it comes back to the resources you have to acquire all these things. Claims data is not cheap, and it's difficult to work with. And so we have looked at it in the past. We have not acquired it. We've thought about more like partnering with other data providers that have the claims data. We have the PO data, and maybe put something together that's interesting. So we've had some of those types of conversations.
On that point, what other data sets do you have new things, the pipeline? How are you thinking about the next couple of years of
Yeah, so it's more of an evolution for us. So, we've been a data provider for 13 years now. We have been spending a lot of time and effort to develop a software product. Basically, we've looked at our tech stack that we use to create our data product, and we're like, the hospitals actually could benefit from this. So there's a product that we're developing and we're hoping to launch shortly. It's called EARL. EARL stands for Enrich, Analyze, Report, and Learn. And so it's a cloud-based AI-enabled supply chain productivity tool. And so what it allows, one of the big issues with this type of data is data quality. So the first thing it does, it really helps the hospital to adjudicate their purchase orders in real time and make sure it's compliant not only with their item masters, which is the approved list of products that they're allowed to buy, compliant with their contracts, make sure the information is accurate. So when they send it to the distributor, they send it to the manufacturer, it's not coming back and delaying, creating any supply chain delays or supply chain risks. Then on top of that, it has all the spend analytics, right? So all the benchmarking. So it allows you to kind of say, what am I paying relative to the rest of the country? What am I paying relative to, hospitals of my size in terms of bed count? So then it can identify potential areas of savings. And then it democratizes access to the data, right? Because it uses an AI interface, so anyone can sort of interrogate the data without needing to go to a data analyst who writes SQL queries to kind of pull it down, right? So the CFO can say, okay, what I spent on bedpans over the last 6 months, type it in, it comes back, natural language comes back, interrogates, creates a chart, whatever, and does all that work for you and, provides all that. It's got a recommendation engine. So if, for example, there's a recall and I need to know who else is providing a similar product and which one should I potentially look at. It identifies things like adverse events. So it'll flag if you're buying a certain product that has increased reporting of adverse events. That's something that I want to be aware of, right? So it flags all that. So this is sort of a big initiative. And what it really does for us now is I always talk about the three legs of the stool. The first was financial services, which is kind of made sense for me. It was the low hanging fruits, the world I kind of came from. And then the manufacturers, which, we continue to work with, but there's still a lot of runway there. And then thirdly, is the actual providers. So that's sort of been our strategy.
The hospital side, is it easy to sell to hospitals? It seems like it's more bureaucratic.
Very difficult. Very difficult.
Knows?
It's very difficult. We're just kind of getting started. Hospitals have changed a lot over the last 10 years. They've actually become really fast adopters of new technology, whereas in the past, they were very reluctant. Hospitals actually, because the marketplace wasn't providing them with the tools that they needed, have actually started to develop internal teams to develop these tools themselves. And so, I'll go to these conferences that are more kind of for hospitals and supply chain folks and things like that. And they've got big data science teams and they're, writing software and they're doing a lot of stuff themselves. So the bar has come down, but there are all kinds of compliance things that you need to be aware of, right? So in terms of HIPAA rules and, all that kind of stuff. And luckily we're on the supply chain side, so we're not touching any patient data. So a lot of that stuff doesn't really impact us. But yeah, it's kind of like a tale of two cities. I was telling your colleague Seth earlier, I read an article this morning that 750 rural hospitals, which is about a third of all the rural hospitals in the U.S., are at the risk of closing in the next 2 years for financial reasons. And a lot of the rural hospitals tend to service more low-income patients, right? So Medicare and Medicaid. And the administration's been making huge cuts to those programs, so these hospitals can't survive. And so, it'll be interesting to see sort of how that plays out, because the urban larger hospitals will start their patient mix is going to change. That's going to
In what way?
well, because you're going to have more low-income patients that are on Medicare and Medicaid with lower reimbursement. And so if you're operating at a 3-4% net income margin because, you've got professional people with good private insurance, right? Your United Health or what have you. And now that, let's say that's 80% of your population, that drops down to 60% because now 40% because you're absorbing these.
Once the regional hospitals goes down,
Right.
good.
I mean, those patients have to go somewhere, right? They have to go somewhere. Unfortunately, it means that they're going to have to drive an hour or 2 hours or whatever. Emergency care is going to decline. So,
Yeah, there's also just broader demographic shifts in terms of population aging.
yep,
Yeah.
yep,
There.
yeah, exactly. And so,
So it's the idea by like if some of these more rural hospitals would get access to tools like Earl, they can save some money on procurement.
yeah, I mean, like if you can, again, these guys are operating at very low single digit margins, sometimes negative. So if you can increase that or improve that by 100 basis points, 200 basis points, because their procurement's better, that can make a huge difference.
How does that work? Are there distributors, like middlemen in the process that will sell these supplies to different hospitals, or they buy straight from the suppliers?
Yeah, so it's a mix of both, right? So you've got large distributors, MedLine, which, was one of the biggest IPOs last year. They're a major distributor. Of course, you've got Cardinal and McKesson and Amerisource. Amerisource changed the name. I forget the new name. But a lot of manufacturers sell directly as well. So for example, in orthopedics, because of the way that works, it tends to be direct because it's very specialized. The toolkits that go with the implants, those aren't sold, right? So you'll have a salesperson that actually goes into the procedure with the surgeons and, they're bringing the right instrumentation for that procedure. And, so that's more of a direct sale as opposed to what would go through a distributor.
Looking all the way back to the beginning of your career, you were initially planning on being a doctor.
Mhm.
You had some people advise you to not do that. What advice would you give to your kids, any kids these days, if they wanted to go into data or healthcare?
Well, for me personally, if I had a do-over, I would have persisted in a medical career. It's one of the big regrets of my life. And
What is that?
it's what I always wanted to do. And I was influenced by an environment that, didn't persist, right? It got better. It changed. And, and I feel like I kind of went another path and then I couldn't sort of go back. And so if I were to do it again, I would have, taken the bullet and, pursued a medical career. But that's just me.
Just to press a little bit more on that, like, is it from having a sense of purpose? Is it money? Is it
It's a
quality of life?
it's a
Like, what is it?
combination of all of that. I mean, so my first job, I mentioned I worked at Sloan Kettering Cancer Center. So my pre-tax annual income, I think, was $27,000 a year, and my rent was $1,300 a month, right? So just do the math.
This is in New York City?
In New York City. This was 1992.
Wow.
And I had a roommate, a friend of mine from college, this Irish guy who didn't have a job, never made rent. He's still my very good friend. I didn't cast him out. So, it was very difficult to sort of be in New York and, just the cost of living here and everything else and, having that sort of income. And, as I got into my mid-20s, you started making these decisions, right? I mean, student loans start coming due, that was another big hit every month. You had to,
How much was tuition back when you were in college?
my God, I went to Brown, so I think it was about $60K a year. That was late 80s, early 90s, all in. And, I took loans on most of that. I finished paying my student loans, I was in my 40s. Yeah, so it adds up and, it compounds interest and everything else. And then I went to grad school, right? So you throw that on top of there. So, but yeah, so for a younger person to start now, I mean, I think being an entrepreneur is a fantastic thing to do. I think it can add societal value. I think, if you latch onto the right idea and you execute well, you can create enormous wealth for yourself in some cases. You can also lose, right? So you need to have a stomach for it. I think you also need a support system. I think it's really important to know, like, I'm a solo founder. And the other thing I would do differently if I were to go back and do it again is I would do it with someone else, right? Because
What kind of skill set would you look for to co-found?
so I started what's essentially a tech company with no tech background. Like I mentioned, like I didn't even know how to use SQL, right? So I had to do like a boot camp and, even sophisticated data science, like, I don't know, like I don't really know machine learning and, the techniques behind all of that. I was a biology major, right? So, put me in a lab and have me run, SDS gel or one of those things. I could do that. So I would have found as someone who had strong technical skills to be like a CTO. And, then I would have done more of the administrative, strategic, biz dev stuff, which I think I'm better at. I would also, get one of my biggest challenges has always been finding good salespeople. And, that's something that to this day I struggle with.
Wait, well, yeah, say more about that. What have you learned? What doesn't work? What does work?
Well, I think healthcare is sort of a unique product to sell because it requires some technical knowledge, right? It's very learnable, right? And but to be conversant in this sort of product, it requires someone that has some familiarity with what it is, right? To be able to say, okay, hey, we put out a report on Stryker, we have some data on Stryker, and by the way, they just had this issue with being hacked and blah blah blah, and be able to speak to all of that, right? To give the user, some context, some narrative, right? I always tell myself, people, it's like, you got to tell a story, right? You got to go out and a story that's interesting and investable, not just we have data. Do you want to buy data, right? And so I think people are able to do that more easily when it comes to like consumer, right? You can go talk about Chipotle or tech to some extent. People could talk about iPhones and, that kind of stuff. I think it becomes a little bit more challenging for folks. And that's one of the reasons why I think ITG didn't really sort of get behind healthcare because the salespeople were really struggling with it. Despite my efforts to sort of like educate them, I'd go sit on the sales desk and I'd be like, just put it on speaker. We'll have this conversation together with your client, right? And do that. But, I do think it has some unique challenges to it.
Yeah, it comes back to the point that you made earlier about you being very collaborative with clients who bothered to ask
Yeah.
and leverage all the expertise that you have, not just on the healthcare side, but also with this data set to be able to do so much more, or at the very least, like avoid some of the mistakes that one would make if you're naively looking at it. And I think the part of the problem is that you end up having some egos out there saying, oh, I can figure this out.
Yeah.
Or can it be? But it is very different from consumer data or other kinds of data sets, from technical reasons, from just the marketplace, all the different parties that are involved, revenue recognition. I mean, there's so much that goes into it.
And personally, it's a part I enjoy most. And it is a two-way street because I learn things from my clients, right? Someone may say, have you thought about this? I'm like, no, I haven't, but I will now, right? I'll go look into it. So it educates me as much as I'm able to sort of help them out, answer a question or dig into something. And so it's actually the part that I enjoy most of the work I do, right? Those conversations with clients where, I'm sort of like wearing my old hat, right? When I was, managing money and, sort of digging into a thesis and, really trying to up with that ground truth, if you will. That's a fun part for me personally. And if I could do that all day, that'd be great. As opposed to dealing with the lawyers or dealing with the accountants or, all the things that go into like running a business, the operations of it, which, like I said, we're pretty small. So I kind of wear a lot of hats.
Really a good place to end is that for all the investors listening who are thinking about how to make more money investing in healthcare and they're interested in MedMine, how can they reach?
Go to our website, medminellc.com, and there's an info link, or you could just email me directly at dale@medminellc.com. I'm pretty responsive, LinkedIn. So
Dale, well, thank you so much.
it's been a pleasure. Thank you.
Thank you.
Okay, cheers.